So it's
36,
happening.
yeah.
It's happening already. I guess traditionally small businesses could have found angel investors, but that usually came at quite an expense in terms of the equity that was asked for or the interest rates charged for monies loaned to them. So obtaining finance hasn't been easy, but now we've got a process. We've got firms that are set up to be the intermediaries to allow the small businesses and their accountants to lodge all the relevant documentation that you write about. So I see it's a great opportunity. We've had 36 in how long? Less than a year?
Oh, yeah. Well, the main bulk of them in the last 3.5 months.
Yes. So that just shows you what's happening. Mind you, the part that I like about it is that they have to have a business plan. It has to be well documented. They have to have budgets. So they've got to have structured their business, probably set up a senior leadership team, allocated functional responsibilities, set goals, documented their vision, their purpose, their values, looked at 3 to 5 years out. They have to come up and document their strategies, thinking about who their ideal customers are, what differentiates them, their brand promises and guarantees, and then how they're going to execute the pattern of meetings, the executives that are involved, the targets they're going to monitor, and of course, finally, the management of cash. So what I like about this is that it forces them to plan and document and put all of that in place in order to raise this capital. And as you know, that's the sort of thing that I've been trying to teach small businesses for 40 plus years.
Yes. Andrew, as a former top 200 ASX company chair, what impact do you think the companies that have been able to go through the crowdsourced funding equity raising process will have on the number of companies that ultimately seek initial public offers to be listed on the Australian Stock Exchange?
Oh, crikey, Pete. Look, it costs about 500 grand minimum, more like a million to do an IPO. When you think about it, there's due diligence and there's specialists, accountants reports, and you've got to pay for auditors and all of that. And a minimum cost each year of just doing your annual accounts and running those meetings and having audits done. And I mean, the cost is enormous. I think too many small companies do an IPO because they haven't got alternatives. So I would see them using crowdsourced funding, equity raising as a first step, perhaps. And then later on, if they are happy to move into the public environment with all its reporting and auditing and the costs of it, they will be well placed to do that more efficiently because they've been through the crowdsourced funding equity raising process. So yes. I reckon there'll be less smaller IPOs and there'll be more of the crowdsourced funding equity raisings happening because of that cost and the amount of work that goes with it.
And they'll be able to use crowdsourced funding equity raising as an apprenticeship, really, won't they? To
yes.
see whether they like it, whether
yes.
they're comfortable with external directors and auditors, etc.
That's right.
And a lot cheaper.
Yes, and you've seen some companies taken from the stock exchange back into private ownership, particularly, look at Green Cross, for example. It has been purchased by private equity and removed from the stock exchange because they saw it as a bargain, given the share price drop that occurred when everyone started freaking out about Amazon coming and its effect on retailers. And Green Cross has the pet barn retail side of it. So I can see that there'll be more of the crowdsourced funding. I think that a lot more companies will probably remain private because of they're in control. The scrutiny that's being placed on the top 200, 300 companies just by institutional investors and their proxy advisors is tremendous. Through approving of remuneration reports, and there's pressure on executive remuneration. It's in the press at the moment, in the Australian Institute of Company Directors magazines and various courses they offer. They're talking about how can we control it. We've got 3 votes in the board. If the remuneration report is not approved and voted by at least 40% 3 times in a row, the board's gone.
Yeah.
So we've got this scrutiny occurring already. So all of that says to me that remaining in the public arena, being listed, is difficult. The pressure's on. It's being caused by the institutional investors and their various proxy advisors, and the shareholders becoming more adamant in terms of wanting better reporting, better communication. So I think this is going to grow.
Okay, very interesting. Andrew, recently a company called Sheba Proprietary Limited, a company that is dedicated to operating an all-female rideshare service, raised
Yes.
$3 million. That's actually a record for crowdsourced
Fantastic.
funding so
Yes.
far. Do you think
Yes.
this is going to encourage other female entrepreneurs to look
Yes.
at the niche market they have to see whether they can do something similar?
Yes, Peter. Look, I think it's an example of a specialist niche. And I think laterally and ask, well, why aren't more accounting firms targeting as their preferred customers businesses controlled by women?
That's right.
This obviously illustrates that women have a need for secure transport for them and their families. Why can't that be extended into trusted advisory industries as well?
That's right.
So,
Okay.
I mean, I hope so. Again, the Australian Institute of Company Directors have just announced that the top 300 companies all have hit their targets of above 30% female representation on their boards now.
Oh, that's very good. Okay.
So it's a growing force or revolution, or is it an evolution? It's happening slowly but surely within our community, and it's a good thing.
Okay. Andrew, many company directors and business owners in the small and medium-sized enterprise market don't have a good understanding of what crowdsourced funding equity raising is all about. They get confused with the traditional crowdfunding type activities, raising money for someone that's in an unfortunate circumstances, or for a business that just wants to trial a product. In your experience, having worked with both small and medium-sized businesses and obviously public companies, but also accountants and advisors, should accountants and advisors be doing more to claim this space as work that accountants should be doing?
Oh, yes. Why not? People are talking about compliance work contracting due to, again, there's cloud-based accounting and bookkeeping that's growing. There's outplacing offshore of some of the basic processing. There's talk of artificial intelligence being directed towards taking over some of this processing. So if the basic compliance areas are going to contract, and there's certainly price pressure in that area now, accountants need to be thinking about doing other things. In the past, they've been busy with clients who've come every year for various, and quarterly for various compliance returns to be done, BASs and GST, and then income tax returns, and it just comes in every year. The banks loan more easily to accounting firms than any other profession because of that factor, because they don't have boom and bust like the engineers who are in the construction game. So if the compliance is contracting and the opportunities are there for accountants to be better advisors. But look, education is needed, Peter. So your newsletters from ESS BIZTOOLS to the clients of accounting firms, I think firms should be utilising them and mailing them out to their clients. They need to educate themselves, the accountants, and they need to educate their clients. So education is necessary. Why not use your tool? Sorry, that's a bit of a Dorothy Dix question, isn't it?
Yeah.
I'm suggesting they use what you do, but I believe that that's right. I'd rather use yours than try to write it myself.
Well, that's what we prepared it for.
Well, that's what you're here for. Now, the second aspect of this is that there's a need for greater experience. The accountants need to think about the skills that are needed to be a broader advisor. So it's just like setting up a financial services division in your practice. You've got to learn about superannuation, self-managed super funds, investments, risk management, insurances, finance, and it's an area of specialisation, and you need to develop a skills matrix and look at your professionals and work them through that in preparing a personal development plan for them, a career development plan. Well, the same thing in business advisory areas, goal setting, setting a development direction, looking at articulating purpose, focus, values, establishing, as I was talking about earlier, strategies and execution, the structure of the business, the functional responsibilities, the pattern of meetings and the rhythm of those things. And then I think of accountants, the raising of finance, it's management of working capital from a cash flow perspective and the management of debtors and inventory and work in progress particularly. But it's then the raising of capital to fund growth. Some small businesses grow so fast, to finance that growth, they don't have sufficient working capital. In other words, they might grow 10%, but their cash needs grow 20%.
Yeah.
And they haven't got it, and hence they get squeezed. So better cash flow planning allows proactive finance raising plans and the use of crowdsourced funding. So I think both, what I'm trying to say is accountants and their small business clients need to be educated about the management of finance and cash, particularly as a business grows and scales up, because you can get into trouble from being too successful.
Yes. Yes.
Growing too fast and you haven't got the cash requirements under control.
Yes.
So I think it needs education, and accountants and their clients, they need to read your stuff, discuss it, but do further learning and start utilising some of the particularly cash flow management planning tools that are now available that link into the popular accounting applications, and start preparing those, not just a working capital cash flow budget, but a 5-year, if we grow at 5%, 10%, 15%, 20%, what will our cash requirements be? The sort of what if planning tools that are now available. So accountants need to educate themselves. So perhaps they've got to spend 30% of their time learning new things and experimenting with their good, friendly clients before they start thinking about charging fees for it.
Okay, well, thank you very much for your insights today, Andrew. And I'm sure that our viewers will be very interested in listening to what you've had to say. So thank you very much and have a good day.
Thanks, Pete. You're welcome. It's a pleasure.
Bye-bye.
Cheers.